Happy New Year to each of you. I'm Carolyn Corda, Chief Marketing Officer at ADARA. Let me start with a thanks to HSMAI for the opportunity to share our view on recent consumer activity. For those who aren't familiar with ADARA, you might wonder where our insights come from. We have over 300 consumer brands that share their data with us, including names you likely recognize, such as Marriott, Choice, and Kayak. In short, we have a lot of data. We typically see over 14 billion searches a year and almost 1 billion errand hotel bookings. We're able to get quite detailed on transaction behavior, as most of our 1 billion digital identities have on average more than 20 data elements per identity. Let's look at the trends. This chart captures hotel booking transactions made from December 1st to January 7th, broken out by business in pink and leisure in green. This is an apples-to-apples comparison of recent booking volume versus the exact same period in the prior year before COVID began impacting travel planning. COVID's negative impact on hotel demand shows gradual improvement, with leisure gaining a few percentage points from a 24% drop to a 20% drop over the three periods: end-of-year holidays, early winter, that's January 16th to February 15th, and then late winter. For business travel, we see a more robust recovery from being down 37% for the holidays, improving to a 20% drop for early winter travel, and a very modest year-on-year improvement of 4% for late winter, early spring travel. Given that business bookings tend to be more last minute, I'm expecting that slight positive year-over-year gain to diminish or even flip negative as we get closer to the late winter travel dates. We've been closely monitoring booking windows as a way to track changes in consumer sentiment. In this chart, we're comparing the booking mix from the pre-COVID, more normal period on the far left, to what we've seen throughout the year. The most recent period from December 1st to January 7th of 2021 shows a mix that's closest yet to what was more normal prior to COVID, which is a positive indicator. Today, short-term bookings, 0 to 14 days out, account for just over 40% of all bookings. That's the pink segment. At the other end of the range are the long-term bookings, more than 91 days out, in the gray color. That's increased from 12% of the total to 18%. It's the medium-term booking time periods that have shrunk. Creating clearly segmented offers, one for last-minute traveler, another for trips taking place in early spring and beyond, are necessary to ensure you're covering all the bases. During last month's trend review, we highlighted big shifts in performance based on class of hotel. Of course, hotel bookings in aggregate were and continue to be down. However, in the higher end upscale, marked in purple, and luxury in blue categories, we're seeing consistent year-on-year activity increases for the current travel periods in the range of 30 to 45%. There's a clear contrast with economy and mid-scale classes. Now, it's important to note that upscale and luxury classes comprise a relatively small percentage of total hotel volume. So this positive bump doesn't compensate for the poor performance of the industry as a whole. Our hypothesis that consumers are splurging with their unspent vacation budgets on more luxurious experiences continues to gain strength. For marketers, tapping into this concept of upcoming travel as an indulgence the consumer has earned is likely to pay off. We're continuing to track the prevalence of drive versus fly vacations. To make that distinction, we estimate the distance from the booker's home city to the location of the hotel. If that distance is more than 600 miles, we designate it a fly mode trip in green. If it's under 600 miles, we categorize it as a drive mode trip in pink. For the recent holidays, it was a 60-40 split, drive versus fly. For the next month, we're expecting an increase in fly mode trips to a 51-49 balance. For the period of February to mid-March, the ratio swings back a bit in favor of drive trips. We see a corroborating trend in the popularity during the same period of destinations such as Orlando, Honolulu, and Phoenix, destinations that tend to attract people from fly markets. For marketers, knowing that there's still a segment out there that's flying can help you better target potential origin markets. For this last chart, we examine the type of travelers booking trips in the upcoming months. ADARA's proprietary traveler value score factors in travel spend and frequency, elite status, and deal-seeking behavior. We use this traveler value score, TVS score, to categorize travelers into 3 groups: high TVS, the road warriors; medium TVS, casual travelers; and low TVS, novice travelers. Comparing the most recent period on the far right to the early recovery period, the column just to the left, shows that the share of novice travelers has increased at the expense of the mid-TVS, the casual travelers. The road warrior share is pretty consistent. This likely reflects that people who habitually travel and spend substantially on travel find that routine much harder to break. The trends I've just shared may raise questions about how you can better target and convert these travelers. We're posting much of this data on the ADARA website. You see the link here. Also, you're welcome to reach out via info@adara.com. Know that ADARA is here to help you, and we're committed to your success as we all navigate to the new normal. Thank you for your time.